Okay, class. This is the second lesson of two that I really want you to focus on early on in this class. And this is regarding recording business transactions. Now, if you haven't gotten to the assigned reading for Chapter 2, I would recommend that you put this on pause, read that chapter, and come back to it. I think it'll make a lot more sense to you once you've had some initial exposure to this concept here. If you recall, in the first lesson we discussed the accounting equation and how assets, liabilities, and owner's equity relate to each other. Here we're going to discuss how to record the transactions that we do on a day-to-day basis. And really that's what accounting is. It's an organizational system to record these transactions so they make logical sense to everybody and people can make decisions based on the information that we record. So our very first order of business when it comes to recording transactions is I want you to erase whatever definitions you have about the word debit and the word credit from your brain. Now, your whole life you've probably understood the word debit to mean the removal of money from an account. It's how it works in your own checking account, and similarly credit means to put money into an account in everyday language. In accounting, it does not mean that. So I want you to erase those two definitions from your brain, because I guarantee you if you don't, it's going to trip you up somewhere down the road. All you need to know about the word debit and credit is that they can be used interchangeably depending on the account category, be it assets, liabilities, and equity. What's important about the words debit and credit is what I'm going to show you on the next slide, and that debit is left and credit is right, period. Now let me give you some examples. Here you see a typical journal entry, just like you've seen in your book. And here you see a couple of T accounts for the individual accounts, in this case land and cash. And you will note that the debits are always on the left, be it the journal, the T accounts, and similarly your trial balance and anything else you might prepare. Now, you also notice that the credit is always on the right. And that's it. The key takeaway in this lesson is that regardless of what account is affected, you record all debits on the left and all credit entries in the right-hand column. Now, another little note, when journalizing, always list your debit first. It's just the proper way to do it. Start with the debit and then the credit. Now, we know that debit is left and credit is right. But we still need to know when journalizing and when transacting business to record a transaction as a debit or a credit. And we have very simple rules for that. For example, when you have to increase the balance of an asset account, you debit that account. And on the other side of the accounting equation, when it relates to a liability account or an owner's equity account, when the balance is increasing in one of those accounts, we do the exact opposite and we credit. Now, when you want to decrease an asset account, logically, you would then credit. And on the other side of the equal sign, the other side of that accounting equation, as it applies to liabilities and owner's equity, when we want to decrease an account balance in that category, we debit. And why do we do this? Well, at the end of the day, we want to know that our account is in balance and we want to see it. So if we are making a debit on one side of the equation and a credit on the other, when they're lined up next to each other, left versus right, we can clearly see that they're in balance. And that's why the rule is the way it is. It's that simple. So it takes some practice, but when journalizing, if you want to increase the balance of an asset account, debit. If you want to decrease an asset account, credit. And for the other accounts, you do the exact opposite. Now, I know you're just getting started here with accounting, and you might find it's difficult to determine what type of account you're working with, whether that be an asset, a liability, or an equity account. So I've listed a lot of the accounts that you're going to run into in this course. You'll see on the asset side we have cash, short-term investments, accounts receivable, inventory, land, buildings, etc. On the liability side we have accounts payable. Those are credit accounts that we must pay other people, like suppliers. We have notes, which are loans. Expenses payable. Unearned revenue, which is a liability because we've accepted money and we've yet to provide a good or service for that money that we've received. And then on the owner's equity side, you have your revenues, your expenses, and your owner's capital accounts. Now you'll note I have a little note there that says contra. We're going to cover that in later lessons, but I wanted it to be there for you so it is there when you use this down the road. When journalizing, I want you to ask yourself 3 questions. First, which accounts in those account lists are being affected by this transaction? That will let you know whether you're going to need to record it in the debit or the credit column. Second, ask yourself, are the balances increasing or decreasing? That also helps you determine whether it's going to be a debit or credit. And then finally, after you record the transaction, make sure the equation is in balance. You have the same amount of debits as you have as credits in the total. And let's demonstrate that here. We're going to start with our accounting equation because it really is the basis of all this. And let's say we're going to start a new company, and the owner is going to contribute $100,000 in capital. And I show that in a T account with the initial contribution on the credit side of the T account, right? Because if we're going to increase the balance of an owner's equity account, we credit. Now that capital goes into cash. I also show that cash account as a T account, and I show $100,000 on the debit side because when we want to increase the value of an asset account, we debit. And we're in balance, 100,000 cash, 100,000 capital. Now let's see what that looks like journalized. Here you see again, because debits are always listed first, we're going to show our cash as a debit, and right below that we're going to show our capital account as a credit. You have 100,000 on each side, you're in balance. Now let's actually make a transaction. Let's say you're going to go out and buy some land for $200,000. Land is an asset, so we have $200,000 debited in the asset account. And we're going to buy this land with $160,000 in debt, which I show as a credit under the land mortgage account, and $40,000 in cash. Now on the cash side, I'm having the effect of decreasing an asset account. So that would go on the credit side to bring a debit balance of $60,000. Now you'll see down in the journal, I've added that transaction journalized. We have a $200,000 debit on the land side, a $40,000 credit on the cash side, and a $160,000 credit for the land mortgage. 160 plus 40 equals 200, and 200 for the land. Now, the trial balance really demonstrates why we use the debit credit system. And really, again, it's the left and right system. It's a way for us to see if our accounts are in balance. So, at the end of the period, the reporting period, we're going to prepare a trial balance. It's going to list all of our accounts and the balances in those accounts. So I've made a small trial balance here, and we'll start with the assets. And you'll see that my cash has a debit balance of $60,000. My land has a debit balance of $200,000. My land mortgage has a credit balance of $160,000, and my capital has a credit balance of $100,000. The two together equal $260,000. I am in balance. And what's my mantra? Balance is beautiful. So that is it. Easy peasy, right? I know that this is going to take some practice before it really sinks in, but what I want you to do is take that screen that I showed earlier. I've made a version in PDF that you can find attached to this lesson note, and I want you to keep that with you while you're journalizing. If you're ever confused about whether an account is an asset, a liability, or an equity account, it's listed there for you. And when you find that account, just look right up above. Is that asset account increasing? There's a big D there, debit. And that works across the board. So keep that with you. I find it is a great tool for students to use when they're journalizing transactions. So good luck with the homework. Keep practicing. It will start to click with time. And if you have any questions, feel free to email me. Thanks.